I gotta be honest, when I initially saw this, I thought it was an April Fool's joke. But of course, we are many months away from April, and it was no joke. Warren Buffett has finally bought gold. His investing company Berkshire Hathaway has bought 20.9 million shares in the stock Barrick Gold Corporation with a total value of $564 million. So technically he did not directly buy gold, but he bought a company that mines and sells gold. Now this is interesting because those of you who know Buffett will know that he has bashed investing in gold for a long time now. He said back in the day that gold gets dug out of the ground in Africa or someplace, then we melt it down, dig another hole, bury it again, and people pay to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their head. On CNBC, he went even deeper into why he doesn't like gold. Here's the audio.
I will say this about gold. If you took all of the gold in the world, it would roughly make a cube 67 feet on a side. So if you took all the gold in the world, we could have a cube that went down there 67 feet, 67 feet high, and that would be the whole thing. Now, for that same cube of gold, it would be worth at today's market prices about $7 trillion. That's probably about a third of the value of all the stocks in the United States. So you could have a choice of owning a third of all the stocks in the United States, or you could have a choice of owning that little block of gold, which can't do anything but kind of shine there and make you feel like Midas or Croesus or something of the sort. Now, for $7 trillion, there are roughly 1 billion acres of farmland in the United States. They're valued at about $2.5 trillion. It's about half the continental United States is farmland. You could have all of the farmland in the United States. You could have about 7 Exxon Mobils, and you could have $1 trillion of walking around money. And if you offered me the choice of looking at some 67-foot cube of gold and looking at it all day, you know, maybe touching it, and fondling it occasionally, you know, and then saying, you know, do something for me, and it says, I don't do anything, I just stand here and look pretty. And the alternative to that was to have all the farmland in the country, everything, cotton, corn, soybeans, 7 Exxon Mobils, just think of that. Add $1 trillion of walking around money. You know, maybe call me crazy, but I'll take the farmland and the Exxon Mobils.
But then 2020 comes around, we look at his 13F filings, and what do we see? None other but a gold company in there. Over $500 million of Barrick Gold Corporation bought. So the question must become, why the change of tune? Why now, in these current market conditions, does Buffett decide to invest in gold? This Charlie Munger clip might give us a bit of a hint as to why.
Well, I suppose the one time when a single mother might want to own gold compared to anything else is if she faced conditions like a Jew in Vienna in 1939, or, I mean, there are conditions you can imagine where some form of transportable wealth would be useful compared to anything else. But absent those extreme conditions, I think it's for the birds.
So there are a few conditions in terms of the economy, in terms of the stock market, where Munger believes it is a smart investment to buy gold, and we might be seeing these conditions in today's economy. But also remember this, it's not like Buffett has gone and put a massive position on gold. $564 million might seem like a big investment to most people, but for Berkshire, it only makes up 0.28% of the entire portfolio. Nevertheless, it is a change of tune for Buffett, and I want to go over some potential reasons why his investing company is buying gold. The first thing that we need to understand is that he uses cash to buy gold. So if Buffett wanted, he could leave this $500 million in cash. The only problem with this is that cash is very quickly becoming devalued in today's environment. We all know that the Fed, Uncle Jerome, has been printing a lot of money over the past couple of months. in the form of stimulus checks and loans. He's done this to prop up the economy. Over just 3.5 months, the Federal Reserve has printed a little over $3 trillion to help American citizens and businesses. The problem with this is it devalues the current money in the system. I'll give you an example. Let's say there were 3 trillion trees in the world and they were each worth $100, but then you planted an extra 3 trillion trees. Well, those original trees would not be worth as much. It's just a simple supply and demand equation. And that's what's going on now. The Fed is printing a lot of money and this devalues the currency, aka inflation, one of the first things you learn in economics. However, when you take a look at gold, you can't just print more gold. I mean, don't get me wrong, I wish we could, but it's not possible. There is a set amount of gold in the world, and therefore you can't just devalue it by making more. This is one reason why a lot of investors believe that gold is a great symbol of safety for when times get volatile or risky. So, Buffett, finally in the 70 however many years he's been investing, decides to buy gold. Now, there are a couple of ways that you can buy into gold. The first is directly buying it. Normally people do this through an ETF, which basically just holds a bunch of gold in vaults and tracks its price. The second way, which both Buffett and I believe is a smarter way, is by buying a company that mines gold. Now, I just want to explain the basic concept of why this is a smarter way to own gold. Okay, you've got Barrick Gold. They're currently earning $11.3 billion in revenue. Their expenses are $7.9 billion. That gives them profits of about $3.4 billion. Okay, now let's just say that over the next couple of years, the price of gold doubles. If you directly own gold, your investment therefore doubles in size. But if you own a gold miner like Barrick Gold, it's a different story because now their revenue doubles, which would mean they now have $22.6 billion. But expenses stay the same at $7.9 billion. That means profit now becomes $14.7 billion. Basically, it's just quadrupled in terms of profits, and investors make a lot more money now compared to if they just own gold directly. Does that make sense? I hope it does, but I'm sure this is a big reason why Buffett has chosen to go with a gold miner instead of directly owning gold. Now, the gold miner that Buffett chose to go with, as I mentioned multiple times in the video, is called Barrick Gold. The interesting thing about Barrick Gold is it's a company that I've personally mentioned multiple times in 2019 about being a smart way to invest in gold. Who knows, maybe Buffett's been sneakily watching some Cooper Academy videos. Okay, that's obviously a joke, but I like to dream. Anyway, I do want to delve a little deeper into the stock that Buffett's bought. So Barrick Gold is actually a gold and copper mining company based in Toronto, Canada. They produce gold and copper in 13 different countries in the likes of the USA, Argentina, Zambia, and Papua New Guinea. They're currently the second largest gold mining company in the world, and they're expecting to produce between 4.6 to 5 million ounces of gold in 2020. It's a lot of gold. Looking at the numbers, they're currently selling at around $30 per share. Buffett, he bought in a bit before this, so that's around the $25 to $27 range. And yeah, it's a relatively big company. It's around that $50 billion market cap, and just numbers wise, it really is a Buffett style investment. The PE ratio is 12, which in today's environment is quite low for a stock. As well as this, they pay a nice dividend of 1%. So what can you say? It's an interesting change of tune from Buffett and the normal approach that they take at Berkshire. And I'm sure Ray Dalio, he might be reading this news with a little bit of a smirk on his face, because years ago, he was saying Buffett is making a mistake by not buying gold. Here's what he said.
I think gold should be a part of everybody's portfolio to some degree because it diversifies the portfolio. It is the alternative money. We have a situation now where when you have too much debt, Too much debt leads to the printing of money to make it easier to service. So all of those things mean that some portion should be in gold.
Warren Buffett won't touch gold.
Okay, yeah.
You think he's wrong? Well, clearly you must.
I think he's making a big mistake. Yeah. Gold is like cash. It's an alternative version of cash. So over long term, it's not the best investment. Over long term, it's a little bit better than cash over long term. It is, however, when you're having a monetary crisis, when you have a fiat monetary system, and you have the need for money. Debt is a promise to deliver money.
Right.
So if you look at each of those devaluations that have taken place, March 1933, President Roosevelt closes the banks and then opens them and says you can get your money. And then they broke the link with gold. And so the history over that period of time is that money can be produced. Gold is somewhat limited. It's an effective. It's an alternative that should be part of everybody's portfolio, but not in a big way.
Basically what Dalio is saying is what I was trying to show you earlier on. You can keep cash, but that's getting devalued at a high rate of knots. Gold, it tends to hold its price, especially when times are tough. That's why I personally made a decent sized investment in gold a couple of years ago, because I tend to agree with Dalio when he says it is prudent to have a well-diversified portfolio that is 5 to 10% in gold. I personally use it as a portfolio hedge. Okay, what do I mean? Let's say your stock, part of your portfolio crashes and cash gets devalued. Well, in these conditions, it's likely that gold is going to be, at the very least, holding its value, probably going up. So the example I use is the last 07-08 recession. Here gold in the crash and the couple of years following the crash went up by 2.5 times. That's exactly what a hedge is meant to do. But even with all of this said, I gotta say I was surprised when I saw Buffett's Berkshire Hathaway buy gold. It's just something that I never thought he would do. But you know, sometimes you have to go against your old ways and form new opinions on things. And I think it's a smart investment from Buffett personally. Whether you like it or not, these are volatile times that we're in. We're in market conditions that we've never seen before. So I don't see anything wrong with having a safety hedge in the form of gold.